This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Good morning, everybody. Let's get straight into it. Really, there's not much to say. We've got the PPI coming out today, which is going to throw a bit of a spanner in the works, left, right, or centre. And the only way it's not going to send it is left. So we've got that unpredictability factor kicking in at some point today. The one thing I would say, though, is that on a technical basis, we're way ahead of all major moving averages. It's looking very good. Obviously, the V-shaped recovery from that simple moving average, the golden cross retest, powering on through. And alts looking to do a bit of catching up. That's a speculative, gambly type vibe, I'm telling you now. But we were talking about this on the live stream last night, and there is evidence to suggest that alts are going to catch up. Not enough to call it an alt season. I'm not going to call it that. There's no rotation or anything. It's very much a Bitcoin driven market. Bitcoin is the chart of charts. It's the one that has basically forged the upside to all the others. There's going to be the odd altcoin that does its own thing occasionally, but for the most part, the market moves as one, and this market has moved in the shadow of Bitcoin, which is why you'll have noticed, at least over the last 24 hours, not so much right this very moment in time, that sats have been sucked out of the market by Bitcoin's move. That's fine. That's exactly what happened in the bull market of 2019. That happened in 2020 as well, when Bitcoin was rallying 300%. Occasionally this will happen. This is why I suppose we should always have the largest portion of our portfolio in Bitcoin. Just because, all right? Just because. And also it's an effective trading pair when the time is right. Make those rotations when situations occur that suggest an alt season will be a prolonged event of a week to a month or more. That's an alt season. What we're going to see today, if anything, is just going to be some catch up. And it could be significant. I mean, this is just the remnants of what was left of the live stream last night. And these are still moving up quite nicely. So it's not, you know, it's pretty sweet, isn't it? It's all pretty sweet. Anyway, for Bitcoin, let's just take a step back to the S&P. Now, this is the problem, I would say. This is a bit of a problem. Now, there's two ways to interpret it. One would be based on the TA, which is downside, most likely. Focusing on this chart and this chart alone would suggest downside is the most likely. We're looking at this on the futures market here. This is currency.com. I don't know why I've gone there. Let's go to Capital. At least that's something that I trade on. What we're seeing is breaking down below this support. It's a diagonal trend line. It's not the greatest thing you've ever seen, but it is a breakdown so far. We could also assume that the top side of this range, being the 200 exponential or the Bollinger Band center, is the top as well for this current move. Now we're below all major moving averages, all of them. Death cross as well on the daily. So everything, we've come up to retest this 200 simple moving average on the daily, 1, 2, 3, and possibly 4 days in a row without being able to reclaim it. Now there was a decent move on the S&P. Played it, pretty sweet. Unwilling to hold it, but played it, and it was quite nice. But at this very moment in time, it does look like it wants to continue to go down. Now, the reason I'm saying all of this is because the TA on this chart looks like further downside. Short signal as well to boot. So we've got a short signal kicked in on the itchy cloud. So there's every reason to expect this to continue to go down. The only reason I'm skeptical about it is PPI. And also the idea that the Fed might not do a 50 basis point, they might do a 25, they might pause, they might even lower rates, which I find highly unlikely. But the markets, or at least the Forex markets, seem to have tried to price in the idea that they will at least not do 50 basis points. And this is what we said on Friday, which is a telltale sign that markets might respond to that because we all think of euro dollar being the overall indicator of health. We've been waiting for this retest to buy a dip on. We retested it, we bought the dip, a dip that we buy across all markets, because this is the general overview, I suppose, the simplest way to summarize it in like a 10-minute video that I do, you know, in the morning for you guys. Whatever this chart is effectively doing, whether it's bullish or bearish, is what the markets are likely to continue to do. This isn't going to be the case forever, by the way. This has certainly been the case this year. Towards the back end of last year and this year, that's been the case. We've used this as a general, I don't know, health thermometer for the markets, and it's proven to work out quite well. But we are at the top of a Bollinger Band as well, so we should expect resistance at this moment currently. But if PPI comes through better than expected, then yeah, we should see the inverse of this happen. So this bearish chart right now might just flip to a bullish chart. It wouldn't take long to do it. If we reclaim all these moving averages which are above us, it's only a 2.5% move, and then we break bullish once again, and we actually break out of what would be currently sitting at a bearish situation, bearish setup, looking like further downside is most likely. But again, 2.5% will get rid of all of that. A closure of 2.5%. It's a lot to ask, to be honest with you. To be honest, it is a lot to ask, but that's the deal. So if we think about that, and we think about the euro being resistance, gold as well is looking like it wants to have a retest of down into what, mid 1800s. So we're thinking about further downside, generally speaking. So if that's the case, then obviously we see that the Bollinger Band has reabsorbed the price action, which is perfectly normal, down about 5% from the peak. Absolutely perfectly normal. Think about the roaring move that we've had over here. So obviously I bought this dip around 21,500, and I bought altcoins around this area too. And so all of those have worked out quite well. And we were speculating black swans, and it looks like the US is trying to avoid black swans at the moment, which is why we're so much hopium surrounding this PPI and the next FOMC and any old fart that comes out the back end of anyone who works at the Fed. Or even government too, Biden as well. Anyone can fart in the right direction and cause upside. They can fart in the wrong direction and cause downside. So the markets are extremely fragile to farting at the moment. But if we apply the TA, we do look like we are going to continue on this. Doesn't mean we're going to continue immediately. If you didn't buy this dip or you didn't buy this dip, then I wouldn't buy this area here. There's no reason to want to buy this right now here. That's crazy. It's called FOMO. You buy the dips, don't you? You buy at support. So we buy here, as we did. You don't buy here. The next place you'd be looking to buy would be a retest of at least a moving average, or even a simple horizontal, which would say, the next time I'd feel comfortable in saying, if I hadn't bought any of these dips previously, if I hadn't done any of these successful trades, I would actually have to wait till the price action either comes down to 23,300, maybe 22,000 flat, which is your Bollinger Band. Sorry, 22,500 is up a little bit now. Or yeah, all the way down to these levels where we bought the dip in the first place. And this is significant droppage. I'm not saying that this is where we're gonna go. I'm not saying that at all. I'm just saying if you missed it, you've missed it. You're gonna have to wait for moving averages to catch up with price action, or for price action to break down to moving averages. You can't buy into this area now. It would be crazy. Although obviously my video yesterday says, look, there's targets above us now. We made a new high yesterday. Excellent, new local high. So with that said, we got to target the next high, which is about 28, and then 32, and then 38, and then maybe 40. All of that is on the cards as we're in what looks to be the beginning of a trending move. But you just don't FOMO, all right? Don't FOMO. I know that a lot of people watch this and it's so counterintuitive, because as we go down to supports, I say, this is, you've got to stick your neck out and, I'll buy this dip and I'll buy this dip or whatever. And people are saying it's going to go down lower. It's going to go down lower, because this is all they see. They see that. That's all they see. But you're more likely to have a positive reaction at support than a negative one. That's the point of it. So you buy the red, not just blindly buying because it's red, but you buy into areas that have been laid out on the chart in advance. Whether it be a decent horizontal or moving average of significance, something along those lines. That's where you buy. Obviously, people don't see it like that, and I understand. So I completely understand that. Oh, it's going to go down lower. I won't buy here. I'll buy down lower. It's going to go down to a new low. I saw it on Twitter. So, I mean, I get that completely. And now what they'll be seeing is, oh, it's going to keep going higher. It's going to keep going higher. Oh, what are you talking about? It's never going to come down to these levels. Never again. Because that's what people see. I get that, right? That's just human nature. It's just how we're designed. We're designed that. You've got to reprogram your mind to think in the opposite way. This is why I always have a plan. These plans that I've had to buy these dips have been in place since January, since we started to trend up. Again, I called the moving up to 19,000 from the lows. and then wanted to get out, then bought back in at higher and then got back out and blah, 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 blah. It was all based around things that we saw around Christmas for the euro and blah, 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 blah. You heard it all before. So, I have to stick to my overall analysis. And for me, using the higher term timeframes like dailies and weeklies is how I do it. So it does mean that a trading setup can present itself to me, and I still have to wait a couple of months for it to play out. And there you go. And then wham, bam, thank you, man. Execute the trade and live the dream. So, on the very small intraday timeframes like today, I am looking for a pullback. It is probably required. Resistance, 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 and again, resistance over here, and obviously being reabsorbed back into the Bollinger Band, floating outside of any areas of significance outside of the 24,300, which we've got there, which is going to be roughly still below the 200 weekly moving average as well. So we're below all these areas of resistance, the major ones. So to expect major continuation from the charts today, I think is unrealistic, unless, of course, someone farts in the right direction and it smells sweeter than normal. And that's what we would be looking for if we're looking for any further upside today. If there is no farting taking place, then I would say a natural consolidation is probably more than likely going to take place as we see downside form on the S&P. So yeah. But I have to say, outside of that, some altcoins might actually continue up, because we're not looking for any breakdowns on Bitcoin unless we break down below 22,000. If we break down below 22,600, which is your Bollinger Band center, which 22,700 more or less, then we should expect further downside anyway. But 22,200 flat level of 22,000 as well. Breaking down below there, then you'll be looking for a full bore. That's where the major downside targets will kick in. But for the moment, we're not there, are we? We're above all of those areas, and we're expecting to come down to lower zones where we can pick them up or take positions or whatever. Either way, the largest bulk of this move has been done since the Friday's live stream, where we were speculating about buying 10% of our available funds. We, over the space of 4 days, Bitcoin did 35%. It did do that. So that was pretty much the move, I would say, for the moment. That is pretty much the move for the moment. And you cannot complain with those kind of gains. And that's just Bitcoin. There will be some altcoins we've noticed that people were checking on the stream that did over 100%. It is what it is. I know I have to say that the move, at least for this very moment, is likely found a temporary peak. But it's not a peak which is going to break down, in my opinion. It does not look like it wants to break down. The reason I say that is on the lowest term time frames, we didn't get any bearish divergence. We're just consolidating now. That's a 1 hourly, all right? So if you're not going to get it on the 1 hourly, you're not going to get it on the 4 hourly, you're not going to get it on the 6 or the 12 or the daily. So we don't have bearish divergence. So what we're looking for would be a natural consolidation at best. And that would be given to us by the continuation of this downtrend that we see, a breakdown actually on the S&P, which is only going to emphasize any kind of intervention by the Fed, and that is not based on TA. That is based on a decent hunch that they're not going to want to see banks, stocks actually break down. It's not the time for that. All right, you've got to look strong in front of your worst neighbors, your noisiest neighbors, and there's a couple of them, all the way over in the other side of the world that will be watching this stock market, and they don't, they'll be thinking, economy in trouble. Let's have a little, let's mess around over there. Let's start doing some well, I'm not going to swear, it's not good for the algorithm, but you know what I mean. And so the Fed will be like, all right, fair enough, what's 6% inflation at the moment? We can handle that, that's fine. We'll have to just persevere, take it on the chin. 6% inflation is high. We'll see if it comes down gradually. Anyway, we'll 25 it, still a raising of rates, or we'll pause. We'll see what's going on. And the markets, like I say, the Forex markets so far, I believe, to have priced that in. And then the actual in the season stocks will actually price that in when the data becomes available and the decision is made. Very fragile setups, I would say. But as of this very moment in time, the daily on the euro and on the S&P does look like it wants to come down naturally, and it's not a full-on crash or anything like that, but we would be looking to come down into the sixes for the euro. I would say 106.6 Rec City FM, Same with gold, and so you should only assume that the same thing would happen for Bitcoin. However, it might not, but we can assume that that is the case. Either way, the biggest portion of the move has been done. If you're looking to enter into any kind of crypto, just do it with extreme caution. Recognize that you've got your testicles out on a very cold train track, and there's a train on the way. So how long are you going to leave your balls on the line before they get crushed? That is the market that you're playing if you buy into it right now. Okay, that's what you'll be doing. So just recognize that. Okay, yeah, it's your money. You do as you wish. Right, I will leave you with you there. In summary, probably looking for a consolidation now in the shorter term time frames to be picked up later on down the line at major significant areas. PPI is going to have an effect. So will farts from the right people as well. So today for me is going to be a sit back, watch and wait, chill out really, and enjoy the gains that have been made over this last, well, literally just since Friday. Living the dream. Right, thanks for watching. Take it easy.